Sandeep Tandon joins us now, founder and CIO of Quant Mutual Fund. Sandeep, thank you so much for speaking with us because, it's important to sit back, take a pause and reflect when you get to an inflection point which has been long awaited. And I think this all-time high was long awaited, not just as another statistical notch, as crossing a number of hurdles. How do you look at it?
The only way I look at, though we are a lifetime high, but there is hardly any smile on anybody's face because portfolio has not performed, because majority of the retail investor do have large amount of small and mid in that portfolio. That's the reason, despite we are at all-time high, there's hardly any excitement in the market. And the way I look at it is that obviously the large cap will perform very well, and we have been highlighting for last 2 months that we'll not be surprised to see all-time high by December. It happened in November itself. So it's a process. So we have seen Nifty and Bank Nifty at lifetime high. We see gradually this rally will get extended towards mid and small also, maybe with a lag effect of week 10 days. But ultimately it has to move because the background was so perfect. Everybody has reached a stage. People have started actually giving up. We have seen some sort of capitulative move happening in last 10-15 days or so. And so the background was good. So that's the reason I think we have been saying we have been constructive. That's the reason we are largely 98% invested. And I think it's the background which is so good. We should participate rather than sitting on the sidelines.
Sandeep, good afternoon. Neeraj here. You tend to look at cycles so well. I wonder, where do you think, which cycle and where in that cycle are Indian markets right now?
So the way I look at, first of all, let's understand India right now from a medium-term perspective have low beta and negative correlation with the developed market, particularly the US. So if whatever reason, if global market you have seen when it corrected very recently, Indian market has not corrected at all. Rather, it was small sort of consolidation with positive bias. The way we look at from a very near-term perspective, see in today's world, which is relatively geopolitical volatility is very high, narratives are floating around. So that background, instead of talking from next 1 year or long-term perspective, which everybody knows is good for India, I just want to focus on 1 quarter perspective. And I think if I have to look at from a quarterly cycle perspective, I think background is perfect. The quarterly trends are up. So I would like to play with a long bias rather than running through a neutral bias.
Okay. And Sandeep, would the long bias, I heard you say in your opening answer that while there might be bias towards large caps right now, eventually the broader markets would perform as well. Would it be therefore safe to assume that 2026 as a calendar year, mota moti, I'm not saying exact to the month, to the last decimal, but mota moti, 2026 as a year could be a year wherein Indian markets at large would do very well, because the last 14 months we've been the rank underperformers.
So Neeraj, the way I will look at, I said in this so challenging and volatile world, I will not like to take that 1 year call right now. Okay. Obviously, 1 year and 5 years, we are very, very optimistic about India. We always say that something has changed in India. So India valuations are expensive and remain expensive, at least for maybe for another 22 years or so. That's the way we believe that when the demographic cycle peaks out in 2047, till the time this P multiple for India will remain elevated. Now, let's not get confused with long-term perspective with the short-term, because investors, it is our responsibility to generate returns. Okay, that's our core business. So that's the reason I say I will review the same, maybe the beginning of January or mid of January sort of thing is much better when we have yearly numbers and then we look at the data points and then take a 2020 call, 26 call. That will be a more mature way of looking rather than predicting right now. Right now, I said just 1 quarter what we are looking at. So let's look at quarter to quarter as of now. That's a better way of dealing with the current environment rather than just getting carried away.
Oh, completely agreed, Sandeep. Just want to understand that you spoke about valuations. Are there any pockets of growth that you think are yet untapped, maybe flowing from policy push? For example, a couple of things in terms of policy push that we've had in the last few days and less than a week, really. One is this rare earth magnet policy, which has come in a 7,200 crore package. Then is the simplification of labor codes. If I go back a little further, then you have this huge push for indigenous production of ships in India and making us a shipbuilding power. Does all of this then eventually flow to gains for the private sector?
So, let's look at government initiative. I think the biggest focus of the current government is about ease of doing business. Okay, even this labor policy which has just come out, basically what it does, it's instead of looking at so many laws, it confines into 4 zones sort of thing or 4 codes sort of thing, and it's just trying to simplify. So I think when the so many complexities which we have, and I think the biggest concern we have is about the judicial reform, which is badly needed for this country. Once you start getting these things, and I think the traction is good, we are moving in the right direction. See, all these things leads to a re-rating of a country rather than just looking at one sector or one stock. Because ease of doing business is very easy to talk and very difficult to practice. And I think government has demonstrated by taking multiple steps, okay, and if you heard the recent SEBI chairman statements or the RBI governor statement, all these things are endorsing what government doing about ease of doing business. So I am very constructive with that background. Now, obviously, any impact of GST, it's a time consuming process. So like sometime market get very excited, which we have seen very recently in auto. Obviously, it was a festive month. So we have seen extraordinary numbers. I will not like to take a pause out here and see how in next 6 months will behave. But logically, demand should pick up, consumption should pick up, because not only the GST, the government has taken initiative on the income tax side, low interest rate environment, and the most important thing is underperformance which we have seen, and see the sentiment which has been so negative. All 3 points put together, I think background is perfect for a rally rather than getting too much disturbed what happened in the past.
Okay. Sandeep, what are the risks to a near-term or a medium-term or a 1-year target? What are risks? Is it the trade truce not happening on time or not happening at all? Or is it something else from an Indian market's perspective?
So I tell you, from a trade perspective don't look at trade just only from a US perspective. Okay. Yes, it is psychologically more important, but when I look at in terms of contribution, is hardly 1.5% to the, or 1.25, 1.35 numbers to our GDP. So it's not very meaningful. Yes, sentiment-wise it looks like. But what you really look at and analyze what government is doing, they're talking about bilateral trades getting built. So recently was Israel, or you've seen in what happened in the Middle East, now with UK and now with Europe. So I think government is taking right step instead of depending on one country, which is one of the biggest consumer like US. I think we have moving towards tie-up with this bilateral thing, which is more healthy and can be long lasting. And I always say in any crisis, Indian entrepreneurs have become more mature every crisis. And I think even this crisis, I will look that our Indian entrepreneur has understood the importance of concentration risk, and they will diversify. And the trend is quite, when you interact with corporates, everybody is putting in that effort. So maybe it should be a short-term problem, but a very good step from a long-term perspective. The concentration risk will be diluted. And with this bilateral talks or the bilateral agreements which is going on, led by Commerce Minister, we have seen a very constructive thing. I think that's one reason I have a very strong view that USD INR pair is on the verge of peaking out, which means your long-term depreciating cycle, which we have seen from year on year, we can talk about 3 to 6% depreciation. I think that cycle is peaking out. So obviously the closer to 90 mark or 90 half plus minus 1 rupee here and there, we are there. And hence, I also believe that even rupee has a potential to appreciate from the current level. But I will not like to jump and really conclude and say this is the way it should happen. These are the data points which is endorsing when cycle. So either you look at a lot of people look at charts and say this is a breakout, or I call it peaking out. So I think my data points are more towards peaking out rather than breaking out. So that's a way how the interpretation changes when you look at data from multi-dimension perspective. And this is what is endorsing that risk in India per se is on the lower side. The risk which we are worried will be more global, and we have seen recent turmoil happening in the global equities. We're talking about the concern happening on the commodity side also, particularly on the precious metal side or the crypto side. We have seen extraordinary hype getting built, and they need to be corrected. So I think these are good trends. Whenever you see a sharp spike, if it corrects, you have to live with these volatile world, and that's the way we should readjust accordingly.
Okay. Sandeep, thank you so much for joining us today and giving us your perspective, and I would say a bit of a sobering take on the all-time high, which is also very important to see it from a little longer perspective. So Sandeep Tandon there joining that whole host of great guests that you heard from, and I think